Thanks to booming demand for artificial intelligence, Taiwan Semiconductor's business was better than expected in 2024. But where will the business be in 2025 and beyond? That's what we're going to talk about in this video. That's going to be the topic of discussion. Management gave investors a great outlook about itself and the industry it operates in for 2025 and beyond. So let's take a look at some of these key factors. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So in 2024, the company spent $30 billion on capital expenditure, on manufacturing facilities, on research and development to make sure that it stays in the lead in advanced semiconductor technologies. The company says they're well positioned to capture the multi-year structural demand from the industry megatrends of 5G, AI, and high-performance computing. In 2025, they expect their capital budget to be between 38 and 42 billion. In other words, $40 billion at the midpoint. If you compare that with 2024 at $30 billion, it looks like they are increasing their capital expenditure budget by roughly 33%. That's a big increase. And this goes along the lines with big capital expenditure increases at several of the large tech companies, including several other semiconductor manufacturing companies. It seems like these large businesses are bullish on growth for the next 5-10 years to be spending this much, to be increasing their spending by this much year over year over year. We've seen this over the last, I would say, 3 years now, 2 or 3 years now. As a result, the primary generator of this demand is artificial intelligence. That's what has unlocked all this capital expenditure from companies like Taiwan Semiconductor, ASML, Intel, Micron, and then some of their customers like Amazon, Microsoft, Meta Platforms, Apple, etc. They're all increasing their spending. Alphabet, to capitalize on this growth trend. They don't want to miss out. They see this as a no-brainer to increase investment. They go on to say that 2024 was a mixed year for the global semiconductor industry, and that's true. AI demand was soaring through the roof, but everything else was limited. Consumer sentiment, consumer demand for electronics, the whole electronics industry was mediocre at best, you can say, less than expected. It was all AI related that was driving growth. The consumer industries were like low single digits in smartphones and personal computers and laptops, in other areas as well, not very strong demand. But artificial intelligence was absolutely soaring. So the overall industry, the foundry industry, manufacturing, according to Taiwan Semiconductor, increased by 6% in 2024, but Taiwan Semiconductor's revenue increased by 30%, indicating that the company gained significant market share, most of which came from, well, I shouldn't say most of which, but some of which came from Intel. Intel is losing significant market share in this category. Intel is actually, even though they have their own manufacturing, they're outsourcing some of their manufacturing to Taiwan Semiconductor because Taiwan Semiconductor can do what it does a lot better than what Intel can do, unfortunately for Intel stock investors. The company saying that they forecast the foundry industry to grow by 10% in 2025. So in 2024, the industry grew by 6%. Taiwan Semiconductor is expecting the industry to grow by 10% in 2025. So a big increase in demand for the overall semiconductor manufacturing industry is expected. And of course, this is going to be supported by artificial intelligence and a very mild recovery in every other segment. Smartphones, computers, tablets, etc. Very mild recovery in those markets, but a robust increase in demand for anything related to artificial intelligence. Taiwan Semiconductor forecasting their own full year revenue to increase by close to mid 20%. in US dollar terms. So mid to 20% growth means 24%, 25%, or 26%. Between 24 and 26% is what Taiwan Semiconductor is forecasting in revenue growth in 2025. And so another year of big market share gains for Taiwan Semiconductor is basically what they're saying. If the overall market is only growing by 10%, Taiwan Semiconductor is growing by 25%, then it's gaining market share because it's growing faster than the market. That means it's taking some share away from companies, and some of it is growth for the industry overall, and some of it it's taking away from other companies. They go on to say that even after tripling in 2024, they forecast revenue from AI accelerators to double in 2025 as the strong surge in AI-related demand continues. So one of or two of Taiwan Semiconductor's customers are in this area. NVIDIA, of course, the most notable customer. And if Taiwan Semiconductor is saying that their AI accelerator revenue is going to double, that's a lot of orders coming from NVIDIA, most likely. And NVIDIA has talked about how they are pretty much sold out of most of their technology in the upcoming year. So NVIDIA probably is just going to Taiwan Semiconductor and saying, we want to buy as much as you can produce. And that's what I'm imagining the conversations are like between these two. NVIDIA just saying, whatever you can produce, we'll take it because we are sold out and we have a waiting list. So if you can produce more for us, we'll take it because we have so much demand that we can sell it. The question is, can you produce it? And so Taiwan Semiconductor tripled its revenue in this category in 2024. And then after tripling, it's expecting to double again in 2025. These are massive increases here. To adjust the structural increase in the long-term market demand profile, TSMC is working closely with their customers to plan their capacity and investing in leading-edge specialty and technologies to support the growth. And so these are conversations between Taiwan Semiconductor and NVIDIA and AMD and Intel and Apple and all of its partners so that Taiwan Semiconductor can get a better idea of what their orders are going to be like, not just for this year, but also for next year and the year after that. And if they can secure commitments from their partners for products 2, 3, 4, 5 years in the future, that'll give Taiwan Semiconductor more confidence to invest in manufacturing, to invest in research and development, to make sure they have what their customers and partners are looking for. They don't want to miss out on an opportunity to make sales. They also don't want to overinvest and have extra capacity and have lower margins for shareholders. So I feel Taiwan Semiconductor has managed this very well, and they've demonstrated excellent growth and excellent profit margins and earnings increases over this last decade and over the last 2 years specifically. And it would be reasonable to assume that Taiwan Semiconductor will continue managing this surge, this structural increase, right? When a company says structural increase, what they mean is durable, longer lasting. This isn't like a one-off thing where this year and the next 2 years demand will be strong, but then it'll level out, right? No, what they're saying is there's a structural shift going on where demand is higher because of this technology, because of artificial intelligence. There's just been a bump up in demand for our semiconductor manufacturing process. And so to adjust to that structural increase, we need to make sure that we invest and we have the capacity to catch that opportunity so we don't miss that opportunity, and that opportunity goes to some of our rivals who can potentially leapfrog us if we don't invest in having that technology available. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.